Hello everyone and welcome to another video where we educate, decode and simplify the financial markets for you. Trading in the stock market can be challenging, but with the right approach, you can spot profitable opportunities and make informed decisions. The key is to stay alert, analyze trends and use the right tools. Come, let's explore how to spot strong trading opportunities in the stock market. The first step in trading is to distinguish between strong and weak stocks. Strong stocks move in the direction of the market trend with great momentum, outperforming their peers, whereas weak stocks, on the other hand, lag behind, moving slowly even when the market is rising. So, how can you find strong stocks? Start by looking at trending sectors. If a particular sector is performing well, check for stocks within that sector that have delivered higher returns than others. Stocks that consistently outperform the market indicate strength and offer better trading opportunities. However, if the market is sideways or consolidating and the volatility is low, and finding good trades becomes harder. During such times, it's best to wait for a clear trend before making your move. A well-informed trader always stays ahead. If you want to make smart trades, keep an eye on major corporate actions like earnings announcements, dividend declarations, mergers and acquisitions. These events often lead to sudden price movements, and if you anticipate them in advance, you can capitalize on them before others do. Staying ahead of the news and understanding how such events impact stock prices can give you a competitive edge. You don't need to trade every stock in the market. In fact, focusing on a select few is a better strategy. The more you study and track specific stocks, the better you understand their price movements, trends, and behavior. Some traders also prefer trading indices instead of individual stocks. Whether you choose stocks or indices, keeping your list small actually helps you make better and well-researched decisions. The stock market is influenced by numerous factors: economic, political, and global events. To make informed trades, stay updated on economic data, which includes GDP growth, inflation, RBI monetary policy, and industrial output. Government policies, which include union budget, tax reforms, and interest rate changes. Analyst ratings. To explain, stock prices can rise or fall based on analysts' reviews. And lastly, but most importantly, global market trends, which include international crude oil prices, geopolitical tensions, etc. If you keep an eye on these developments, you can react quickly to market changes and spot profitable trading opportunities even before the crowd. Not all trading hours are equal. The first and the last hours of trading are the most volatile. You can go for it if you have a higher risk appetite. But if you prefer safer trades, you may want to avoid the extreme volatility at market open and close and trade more during the stable hours. Timing plays a crucial role in maximizing your returns. So plan your trades accordingly. Suit your risk appetite and go ahead. Technical analysis helps you make data-driven decisions. Come, let's look at some of the most useful ones. Moving on to the first one, support and resistance levels. These are key price levels where a stock tends to pause or reverse. Buying near support and selling near resistance can be one solid strategy. Moving on, Relative Strength Index, or which we know it as RSI. This helps you determine whether a stock is overbought, that is close to 100, which is likely to fall, or oversold, which is closer to 0, likely to rise. Trading based on RSI can improve your entry and exit timing. Lastly, breakouts. If a market breaks its resistance, it often signals the beginning of an uptrend. Similarly, breaking below a support level could indicate a downward trend. Identifying breakouts early can help you catch big moves. Even if you identify great trading opportunities, it's equally important to trade in a fast and more reliable trading platform for the speedy execution of trades. When selecting a trading platform, look out for the following things: advanced charting tools and indicators, real-time data and market insights, faster order execution, higher security and data protection. A good platform not only provides powerful trading tools but also ensures smooth and seamless execution, helping you make the most of your trades. So guys, spotting the best trading opportunities requires a mix of research, market awareness, timing and technical analysis. That's all for today. Stay informed, trade smart and take advantage of every opportunity that the market offers. If you found this video helpful, do not forget to like, share and subscribe. Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.